Hey guys, I'm going to do a quick video on Li Xiang, which is a new IPO, a Chinese company, an EV maker, and going public today. Will be trading under the ticker symbol LE. So yeah, lots of people have asked me about this company, whether or not I am taking a position, how they compare to Tesla and NIO. And yeah, I'm gonna be straightforward to you, and I'm telling you now that I'm not going to invest a cent of my money in this company. And if you continue watching it from here, I will tell you the reasons why I'm not taking a shot at this company. And but to make it very clear, I think I would actually warn investors of getting into this company today. So yeah, let's just dive quickly into the prospect, into what's the company is doing and how they are different to what's already in the market, and what is their offering for investors here, and what does it mean if you invest in this company, and also ultimately why I'm not taking a position here. And before we do that, please once again smash the like button, subscribe to the channel if you're new here. This channel is all about Chinese IPOs and about electric mobility a lot actually, as well as some companies that have a really big exposure to the Chinese market, such as Tesla. Alright, so Li Xiang or Li Auto has a car called Li ONE, and well, it does look kind of cool. The website is nicely designed, but what I think the first point that many people are getting wrong here is that it's not a EV company, because it's actually, well, yeah, it's a car that is using a battery, but it's a hybrid indeed, because they have this range extender, which is basically another engine sitting within the car, which can enable to charge the battery. And personally, I am not a big fan of that. I'm investing purely in pure EV players because I do think that this is the future. So I wrote an article on LinkedIn because I'm getting lots of questions also about hydrogen. And basically, you know, if you just look here at the efficiency from well to wheel, so where you get the energy from and how much energy is actually used to power the vehicle, and pushing it forward, then you see that pure battery electric cars are by far the most efficient ones. They're even more efficient than the gasoline cars, even though we have hundreds of years now, or not hundreds, but tens of years with optimizing the gasoline, the combustion engine cars. And yes, even hydrogen, the idea of carrying around another power plant in a vehicle that is basically fueling a battery, because that's essentially what it is doing, doesn't make sense to me, doesn't appeal to me. And it's the same now with the Li ONE here that is using a range extender in order to power the battery. So at that point, I think it's already a failed company from the start if they are betting on this kind of technology, because I do think the ones that will be leading this transformation to sustainable transport are the ones that are betting fully on EVs and that are developing this technology and also getting the experience and getting actually forward as a real electric brand. So it doesn't really matter like how good the car is looking here, and also that it's priced comparably cheap, because of course they're using a smaller battery. So that's actually the entire trick that they're doing. Why are they cheaper than Tesla or NIO? It's because they have a smaller battery and they're using this range extender mechanism here. But in my point of view, that's not a competitive advantage. In fact, it's actually a disadvantage. And also, if you look at the prospect here, where they outline how they compare to the markets, I think that's a huge red flag for me as well. They're getting into the market, comparing themselves with Audi, with BMW, and so on, who are also offering those plug-in hybrid vehicle cars that are powered by ICE engines, but at the same time using some electrification here for a couple of kilometers of range that can be driven electric. And for me, that doesn't make sense at all. It's a compromise, and it's not compelling, and it's actually just trying to survive in this medium time frame in between to the transition to full electric here. Other than that, yeah, I read the full prospectus here, and frankly, I couldn't find anything that was exciting for me. Also, they didn't outline the big plans, what they're gonna do with the money, what is the strategy of the company, what's the vision of the company. There's nothing around that. They just have got but one car, and there's no bigger picture of what they would actually be doing with the money that they're raising. So for me, that's a big red flag again, and I do think they're just raising the money right now because of this EV hype. They're branding themselves as an EV company, although they aren't. Their technology might be fine, the car might be good looking, the app might be cool, the autonomous driving, I've seen some reports, is actually quite on par with some other brands out there. However, that isn't compelling for me as an investor enough to give money into this company here. So yeah, some people may be looking at the sales that they're having, and they're looking quite good if you compare them for NIO as well. But the thing is that the company is going public at around $8 billion of valuation. I'm pretty sure it's going to be higher today trading in the market, and I do think it's tremendously overvalued here. So they are making possibly around 0.5 billion or $500 million in sales this year if they continue like they've been doing in the first quarter. So they're roughly trading at a 16 times multiple of their sales, and that's even more expensive than what NIO is trading at, more expensive than what Tesla is trading at, and that's super dangerous if we are thinking about the stages of the startups. So here we are in the excitement phase, obviously, right now. So they're going IPO, and then suddenly there will be starting the uncertainty. Will they be able to deliver on the value? And then later on, they will be going through a huge time of pain and uncertainty with lots of troubles in ramping production, in becoming profitable, because of course they are also not a profitable company as well. So we don't know if they may go bankrupt at some point in time. So NIO already, they jumped this gap. So they are much more mature in a way, and Tesla obviously as well. But for Li Auto, I think I would be very suspicious about if they can actually make it with the current business model and the competition and their positioning, as I've been outlining it from a market perspective, but also from a technology perspective. So there's hundreds of such kind of EV companies out there in China. A couple of them will be IPOing, and a couple of them are exactly not existing anymore, because I think we're going through a huge consolidation here. And well, in my views, as I'm pointing out in other videos, I do think NIO is the winner here in China. I also think possibly Weltmeister or is another brand, or WM Motors. That might be also interesting company, but we do see a couple of companies now rushing through getting their IPO because they really need to fit into this time window, which is closing because of industry consolidation, and now that EVs are quite hyped in the markets. So to sum things up, I'm not having this negative view on Li Auto just because I'm invested big in Tesla or NIO and that I see them as a new competitor. No, actually, I'm happy to invest in other companies and new companies because I do think that this market is growing and big enough to have more than one players to be successful and succeeding. However, as I've been outlining here in this video, I don't see anything that really grasps my interest here in investing in Li Xiang, and I do think they might be actually a trap for investors because, you know, as early in the stage of the startup circle, if the valuation is now going up even more, even though they are already, in my opinion, quite overvalued, then certainly there will be lots of investors trapped in the future, and I would rather see what's going to happen until they have to jump the gap of bankruptcy in a couple of months, and then maybe the stock will be down, and hopefully they will shift their business strategy somewhat and maybe come up with new value propositions that are more interesting, and then I may take a second look at it. But for now, today, I'm not going to put any money into them. And yeah, feel free to leave me a comment down below. Maybe you're a different opinion. I wouldn't say that the stock couldn't go up in the near-term future. However, for me as a long-term investor, with, you know, the fundamentals that I've just outlined, I don't see any value there in the long term. So yeah, I'm staying away. Thank you guys for watching. Hope you enjoyed it, and see you next time. Bye bye.